everybody? Hello? Oh, I didn't turn the microphone on. Hello, everyone. Good afternoon. I was talking to nobody for a quick second. Oh, man, too funny. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. So I added new positions in GameStop, JUMI, and AMD to the long side. I had the TQQQ. I even had it after the close. But I also got filled on a bit into that quick downtick after the close that took me out of it, which I'm fine with. You know, we're hitting that $10 of extension. We're hitting that extreme extension into the afternoon trading session today. We're just kind of getting into it, but the ADMA will catch up a little bit tomorrow. And I'm just so bullish on this market that even though it's been a very consistently profitable trade for me to come in on the other side and short that extreme extension, especially because it acts as a little bit of a hedge when I have so many longs on into that degree of extension. Though I have taken some long exposure now off on the way up. I'm just still so bullish on this market right now that I'm not in a rush to really keep the shorts overnight. But for sure, you know, if we're above today's high tomorrow, and we're at that $10 of extension for SPYs or Qs, I will almost definitely be building back in again to it tomorrow. So market's super bullish. I guess real quick, I have a very hard cutoff at 4:45 Eastern today, so 30 minutes from now. And really, if I can, I'd like to hop off even 5 minutes before that. Just give myself a couple of minutes so I'm not hectically rushing out of here. I got to drive to Idaho Falls. The car I own has a recall, and I have an appointment at the dealership out there just to get it fixed, whatever the problem is. So hard cutoff at 4:45 if possible. I'd like to leave 5 minutes before that. But, you know, happy to do my thing and then answer as many questions as I possibly can that you may have up until that point. But anyway, so market is strong. Who would have thought? SPYs are up a percentage point. Qs are up 1.5%. The IWM is up 1%. If anything, the biggest surprise to me is that the Russell didn't outperform the NASDAQ. It did pre-market. It did immediately after the number. It gapped up more, but the intraday price action, the Russell didn't trade nearly as well as the SPYs or the Qs, which we can take a look at that. So IWM only up 1%. TLT up 1.5%, which is kind of the big thing where I really thought that we would see a bigger move in the IWM and a bigger move in some interest rate sensitive stocks. So I certainly was correct when I was saying that the risk to this market right now is to the upside, and I was correct when I said that an inline-ish number, which the number this morning was pretty in line, would lead to upside action, and I thought it would lead to a pop in the TLT. And even with that, I'm disappointed. I was really hoping that number would come in just a little bit light. That number came in a little bit light. This market would be up another 1.5%, I think, depending on what index you're looking at. But even on an inline number, we had this big, 1% move for the S&P, 1.5% for the NASDAQ, 1.5% for the TLT. So this CPI this morning was definitely conducive to continuation of the bullish technicals on the daily chart that we've been discussing. Where I was wrong was that I thought that with the relief in interest rates that we're seeing, that long duration growth equities would really lead. And the only thing I can potentially point to on that, on why they didn't and why they didn't perform better, is just that it seems like they might have gotten kind of front run on that move a little bit. Obviously, the last 2 days with all the meme stuff waking up, but to some degree, even over the course of the last week or so. So yeah, a little disappointing, I think, on the degree of the move on some of those longer duration stocks, and that the IWM wasn't actually stronger intraday. If you asked me, this morning on an inline CPI, I probably would have guessed that the Qs would be up like 1%, but that the IWM would be up somewhere between 1.5% and like 2.25%. And that's not what happened. The Qs outperformed. So overall, though, the thought process still was correct. Yeah, Rock here mentioned that the retail sales number miss also probably played a role in that. So yeah, but overall, I mean, look, this market couldn't be any more bullish. It's kind of what we said in the morning meeting. Like, the problem with the open was that we were opening up with moderate extension, so it made new longs a little bit tricky, even though they were definitely out there. But you know, if you were trying to short off the open this morning, I mean, forget it. I don't know what you're thinking. You really, in this environment right now, need to wait for us to have a technical break lower, which doesn't look like it's happening, or that real extreme extension to the upside. And I was able to make a few bucks in the TQQQ today, but by being patient. I mean, I didn't execute that short. We didn't really hit that point until like 2 o'clock is when I first put on a real small position to the short side in the Qs. And then I added, there's 2 o'clock, and I added a little bit into this last kind of up move, and then we ranged out a little bit, which let me just work the range a little bit to the short side and liquidated the position into that after hours downtick. But yeah, I mean, super strong market. We pretty much closed at highs, new all-time highs, by the way. So congratulations to the bulls that are out there. From an extension perspective, we closed at about 529 and change with the ADMA at 520.50. So we got $9 of extension in the SPYs as of the close. We'll see how we got tomorrow because the ADMA will move up a little bit tomorrow morning. For the Qs, we closed at about 452.50 with the ADMA at 443. $9.50 of extension in the Qs. So again, just right on the borderline of that more extreme extension. And for the IWM, I usually look at more like $7 of extension. So the Russell's not really that close, actually. The Russell's kind of still more in like no man's land, which makes sense, I guess. A little bit of relative weakness today. So again, market is looking super bullish, but we are borderlining into a degree of extension where it doesn't really make sense to buy, and potentially makes sense to start pairing out of your longs a little bit with the idea to rebuy a dip or rebuy a new setup, or to build into some hedges because of the degree of extension by, you know, shorting some Qs or shorting some SPYs and starting small, but maybe building in a little bit more as we get more and more extended, or if we get more and more extended, just to kind of protect yourself a little bit if you've got longs on, which I do. I've got 24 longs on. So that's kind of the market. As far as individual stocks, I mean, this was a good trading day for me, at least. I hope it was for you guys too. AMD was a really good trade. We talked in the morning meeting. This is why I'm so glad that, you know, I really didn't look at AMD pre-market on my own research, but as part of my kind of process in the morning meeting every day, I've got those big mega cap stocks where I just kind of blast through the charts real quick in the morning meeting every day with the team just to see what the technicals look like. And it was just in the process of doing that as part of our normal morning meeting routine where, you know, first I'm looking at Nvidia. Nvidia got brought up, and I'm like, all right, Nvidia's looking pretty good here above this like 910 resistance that it had been forming. It's opening up at 925. It's a little bit tricky on that entry at that price. Micron I like a lot as well, but Micron also where it was gapping up to, a good amount of extension from the ADMA makes the risk reward pretty tricky. AMD, we noted in the morning meeting, wasn't extended to the upside at all. And you know, that was one of the tricky parts about the whole market this morning, again, was that we were opening up with a degree of extension that a lot of names, when I'm typing them up on their daily charts, I'm like, yeah, you know, you can still buy it, especially if the market's strong. If the market's going to be strong like it was today, it doesn't matter. You could just buy things and it's going to work. But big picture, the risk, reward, and probability of success is not quite as good. When looking at AMD this morning, I was like, oh, this is interesting. You know, it's just kind of gapping up into the 21 or just slightly above the 21 EMA. There's no upside extension at all. But look at this. It's breaking this descending trend line. It's breaking this channel here. In the last pivot high of that we noted in the morning meeting is 156.37. This pivot high is 157.70. So I kind of said, looks like there's some resistance between basically these two pivots, 156.37 and 157.70. But if the market can be strong, Nvidia looks like it's set to break out. It's already gapping up huge. This thing's getting above this trend line. If it can clear above those pivot points, then maybe that can lead to kind of a break higher and a little bit of a catch-up trade on AMD. So this is the first time I've traded AMD in a couple of months, and it was a pretty good trade. Just started with a little bit of a feeler, more or less at the open, because the gap, like with everything else, was making it pretty extended. So a little bit of a feeler versus the opening low. Trade started to go immediately, and it's one of those feelings where it's like, okay, I'm glad I'm making money, but my position size is so small because all I got was a little bit of a feeler that I'm not going to make a lot of money on it. But hey, money's money. I'm in the trade. It is what it is. Making a few bucks on it. And then it kind of gave this technical pullback to the ADMA here, giving a nice pivot off that ADMA, giving an inside nut. So I was actually able to size up into this area as that broke higher. And that was great. So, booked some profit real quick, and then just decided to be really greedy with a decent little position, and held it throughout most of the day. I liquidated a third of my position somewhere after 2 o'clock, just because the market was getting really extended, and this thing looked like maybe it needed to take a pause, and I wanted to liquidate. I had a third of my position that I was trailing really tight because I wanted to liquidate it. I didn't want to have the extra overnight exposure to that degree. And I was like, at this point, I was like, you know what? I've been trailing it. We're approaching the end of the day. The market's getting super extended. I'm just going to book that last third. And then the remaining 2/3 of that core position that I still had, I'm keeping as a swing position. And, we'll see what this thing can do. If this market wants to continue to break higher, and it certainly looks like it wants to, albeit with the extension, we might need a little bit of a pullback and a higher low. I think it's reasonable to see a move to 170 or even 180 in AMD. So I'm trying to build out a game plan where I can be greedy enough to hold at least a percentage of my position all the way up to 180 if it wants to give that move. So that was a really good trade. AMC, GameStop, the meme names were certainly a little bit trickier today. We noted in the morning meeting today that they probably would be, and probably it was worth it to not be super aggressive on them. With that said, though, I definitely took a few trades in GME on some kind of downside extension, buying it into this downside extension with this 5-minute RDR, trying it again into this downside extension where I got stopped out. I got stopped out of my trade at this low. I had, my risk covered, going to make a little bit of money, and then I'm being super greedy and, got stopped out at this last low. And then, honestly, I kind of wasn't watching it anymore in the same way. And it was J. Cole here in the VTF at 125 noted that the stock looked like it was starting to break up again, and there was a little bit of an uptick in volume there. So I got back involved on the way up. And I'll tell you, this trade on the way up was so much easier, even though I made a little bit of money on this trade even by being greedy, and I made a little bit of money on this trade after getting stopped out even by being greedy. This trade was just significantly easier because I'm buying it on the way up instead of buying it when it's still weak and downtrending and trying to take advantage of extension. Now I'm buying it after it's starting to break back above some levels and the volume's starting to come back in. So that turned out to be a really good trade, and very specifically because of that last trade, GameStop ended up being my best name on the day. So shout out to J. Cole for the communication, the VTF that brought that onto my radar. I kept a little bit. It's a small position. I don't feel super comfortable swinging GameStop. This thing could open up at 30 tomorrow. It could open up at 50 tomorrow. So I just kept a little bit that, if it gaps down to today's low tomorrow morning, it's not going to be the end of the world. But if it continues, then I'll be able to add on some additional P&L. And what I am keeping, it's not worth keeping it if I'm not going to be super greedy on it. So the smaller position in GameStop that I am keeping, I'm going to be super greedy on it and see if I can get a move to $50 or $50 plus on it. So that's GameStop. AMC was able to kind of catch the low, even though this is my least favorite one, and make a few bucks on that. That was an okay trade. So yeah, I mean, there's just a bunch of stuff out there. Oh, JUMI, we were seeing the bull flow come in, and I love it. Almost reminded me. I know it's a different stock, a little bit of the GameStop setup before it broke out, because you've got a bullish technical pattern that's starting to get confirmed by bullish option flow that was coming in. We saw a fairly consistent option flow coming into JUMI today. Nothing insane, but some consistent flow there. And you got a really nice pattern here that looks like it's breaking out. So one of the times when I saw the option flow and the stock upticked on some big volume at the same time on this bar here at 1150, I said, oh, you know what? I'm just gonna buy some on this bar with the volume pickup, with it kind of breaking towards highs. I'm just gonna buy some on this bar, also with the option flow, and use the low of this bar as a stop loss. So bought some on the way up. I forget exactly what price. It was not a fantastic price, but not terrible either. You know, mid to upper 630s. Stop loss at $6.22. Was able to capture this decent continuation, liquidated a good percentage of the position, but said, you know what, I might as well keep this too, just because we're seeing some good flow. I think there was like some 750 calls and some 8 calls that were going off that expire relatively soon, and it's clearly a bullish technical pattern. So maybe they squeeze this thing, and why not? I'll keep a little bit also. You know, once again, just kind of playing with the house's money. So yeah, overall, you know, fantastic day for the market. Some really good trading opportunity out there, even if we opened up in kind of a moderate extension zone. And that's pretty much it. It's pretty much all I got. So I've got you know, 13, 15 minutes or whatever. Happy to answer a few questions over the course of these few minutes I have. Not seeing anything in the VTF right now. A couple of things in YouTube. Now that we have broken to new highs, did we ever find out why the market initially pumped and then tanked right after Powell spoke a few days ago on the 1st? The 1st of the month? How am I supposed to remember that long ago? I'm just kidding. On the 1st, though, I kind of really don't remember. Which day was that? Powell spoke? Oh, was that was the actually the Fed day, right? Yeah, that was the Fed day. Yeah, I don't know. I remember Rock, if you're still listening, you had some good speculation on the Japanese yen pair trade causing forced selling into the afternoon that day, possibly to pump the currency, and that maybe that's what kind of created that forced selling into the close on that day back here on May 1st. Outside of that thesis that Rock had brought up in the VTF, I still got nothing for you on it. I still have no idea why we sold all the way back down on that day, but we did, and that was it though. That turned out to basically be the bottom at that point. From Sky Shadex, do I think about market impact when trading? Yes and no at the same time. No, because generally the stocks that I trade are super liquid. You know, I'm trading these multi-billion-dollar, in some cases multi-trillion-dollar stocks. So I'm not worried. I'm not worried about market impact on me buying 1,000 shares of Apple or AMD or Nvidia or something like that. I am not worried about market impact on that. So no in that regard. Yes, in the regards of I want to try to get my fills, and even in those trillion-dollar market cap stocks, your own bids and offers are being utilized by the HFT robots that are out there to sometimes make it a little bit more difficult to get filled. So if I'm trading a stock that I still don't do an Apple. If it's Apple or Nvidia or something, I'm generally showing my entire size, because by showing my size, I'm going to get rebated on providing liquidity. If you hide your size by using a refreshing order or something like that, then you forfeit the rebate. But if I'm trading a stock that is like medium to lower liquidity, then I'll usually utilize, as kind of a very general rule, a refreshing order if my size is going to be more than 500 shares. And even that, it's not about market impact. It's just about getting the fill. Because, I don't have a ton of time to get into this today, and we started to break into it a little bit. I think it was yesterday, when someone asked me about dark pools, because he could have had me start to go off on a whole big tangent. But what you'll see when you're trading, and it frustrates me to no end, and I don't even think it should be legal, is the dark pools don't have to follow the same rules as everybody else. And dark pools can trade in like tenths of pennies, basically. So, like, a lot of times what you'll see is if you're offered out or bidding out in a stock, and sometimes you're the only offer that's there, there's my offer, there's no one else around, like, give me that fill, and a print goes off at what seems to be your price, you don't get the fill. And if you look at the tape, you'll see that the fill went off on a dark pool. And what that is like an HFT robot using a dark pool to chisel your order by like a tenth of a penny, with the idea that they can then bid that order back out a penny down, basically, to try to make a penny on their trade. And if they're wrong, lose a tenth of a penny by hitting out into your actual offer, assuming that you had a sell order that's out there. And it's just really frustrating, because in the occasional circumstance, I think it happened to Dennis today if he's listening, on the occasional circumstance where you happen to be bidding or offering at like an absolute higher bottom, higher or low, you might not fully get your fill because this HFT robot jumped in front of you, basically, and took the order away from you, and you don't get the full fill. And that can be annoying, especially if you happen to be at the top or bottom, and can cost you money. So, again, if it's a super thick stock, if I'm trading the TQQQ or Apple or whatever, I don't care. I'll show 10,000 shares. Doesn't matter. But if I'm trading something that's a little more medium or low liquidity, I still wouldn't consider it to be market impact. It's more just like execution impact, where if I want to bid or offer more than 500 shares, I'll usually refresh the order so that I'm only showing 100 shares. And then those robots that want to chisel me, they don't realize that I'm actually there for more stock, because I'm hiding my liquidity, at least until the order starts to get filled. Sometimes it's interesting where if your refreshing order doesn't get taken right away or very quickly, if they kind of piecemeal it out, which happens sometimes, then the robots will actually go, oh, look, it's a refreshing order, let me jump in front of that too. And then all of a sudden still make it a little bit trickier for you to get filled. But no, I like to consider myself to be a big trader at this point in my career, but I'm not a fund manager managing tens of billions of dollars. I'm not worried about market impact when I'm trading. From Zahor, any thoughts on Dell after the upgraded rally today? I mean, Dell looked great this morning. It was on our list for a buy this morning. They opened it up a little bit high, because they opened it up a little bit high just because the whole market ended up moving higher on the CPI. But Dell looks fantastic. But you need to have it already. I don't like the idea of chasing day twos. You want to be in from below 140, not chasing 152 tomorrow. But it looks good. Ben S is asking, how do you use a refreshing order? Sure. So just bringing up AMC real quick. Actually, I don't want to use AMC. Is this still a stock? Yeah, Siri. I just don't want to get filled. So right now, I just changed my tier size, right, from 100 shares to 1,000 shares. And if I just take an order here, right now I'm set to bid out 1,000 shares on NASDAQ at $3.04. If I just bring that down to 294, what you're going to see is NASDAQ right here at 294 is currently showing 1,100 shares. I'm going to press enter. It's going to show 2,100 shares. Boom. I'm deleting that order. We're back to 1,100 shares. Going back to Siri, you see this little box right here? If I put in a number like 100, why didn't that work? If I put in a number like 100, now I just changed the order, so it's going to be a refreshing order. It's going to show 100 shares, but I'm actually there for 1,000 shares. So again, watch NASDAQ, $2.94. It's showing 1,100 shares on the bid. When I press enter right now, I'm going to be there to buy 1,000 shares, but you're going to see that this is just going to uptick to 12 instead of upticking to 21. Right. So now I just put an extra 100 shares on the bid there, but I'm actually there to buy 1,000. It's a refreshing order. Canceling that again. So for myself, I have my hotkeys established so that if I just scroll down to ARCA, ARCA is already set to auto refresh for me. So if I'm going to use a refreshing order, I don't take the time to do what I just did, which is click on this box with my mouse and type in 100. That's too slow, and I need to be fast when I'm trading. I will, bring up my bid box, choose the tier size that I want, bring it down to ARCA, put it at my price, and press enter. So that's how you utilize a refreshing order. Got a couple more minutes here from Gabriel. Thanks for the chatter and confidence for bulls the past week. I've been adding positions the past weeks. Even before today, I was already trimming coming into today, but I had a bunch left. Awesome, Gabriel. Glad to hear it. From PB Freak, I got CRM through 280.50. Oh, very nice. Oh, I think this got brought up in the morning meeting today too for a breakout. Great trade. I don't know if anybody on our team took it, but it got mentioned in the morning meeting. Yeah, daily chart looks great for that breakout. So you bought the open at 280.50. I love it. You know, a little bit of upside extension there, so you're starting that trade as a pure momentum trade. I sold half into the volume spike at 130. You are super greedy if that's your first sale. Super greedy. Can you talk about what you look for to add back versus just swinging what you have? Sure. So for add backs, I tend to do it in one of two ways. Either one is I'm just doing things incrementally. It's probably what I do more often than not. Meaning, I don't know, if I have 1,000 shares, I'm just making this up on the spot. If I got 1,000 shares from 280, after my risk is covered, I've got 1,000 shares from 280. My game plan is to incrementally sell 100 shares every dollar on the way up till I get to my target at 290, and then I'll just incrementally rebuy that on every dip. That's $1 to get that stock back and kind of work those ranges. It's one way in which I do it, or the way in which I do it that's probably more towards your thought process is when I see the stock get very extended from the 80 MA on my 5-minute chart or on my time frame, then I will sell into the extension and I will rebuy on the test of that 80 MA. I'll rebuy when there's no extension, and that's the way that I would do it. I wouldn't do that probably on stock necessarily that I'm thinking about swinging. Too much of a risk of not getting the stock back, and also, you know, probably not worth it. Like, you're gonna sell 287 to try to rebuy at the 80 MA, which is at 286.50, and keep a 50 cents difference because you got a little bit of extension there, just for stock that you're then gonna look to swing. I don't know if it's worth it. So hope that helps. From Sky Shadex. Good to hear someone nerd out about it. Oh, I can nerd out about it. I try to hold myself back. This is a follow-up on the market impact question. Trying out an options play, but for me, the sweet spot is in those less liquid chains. But I'm such a smaller size, it's a non-issue. Yeah. If you're small size, it's probably relatively non-issue. I think it was just yesterday. I don't have a lot of experience trading options. I really don't. I have very minimal experience trading options, but I was trying to sell, I think, a little bit of those DJT calls that I had yesterday, and I like a little bit, meaning it was 1 or 2 contracts I was just trying to take off the table, and it was incredible to me to watch the robots work in the options market, because the options market, DJT is pretty spready and illiquid even as an equity. But the options market is definitely more illiquid than the equity market. And I remember just trying to sell this 1 or 2 contracts and watching how my 2 contracts were like moving the entire spread of the stock and moving the entire stock itself, because I was offering out those 2 contracts and instantly, and I went low offer. Instantly, all this robotic liquidity joined me and even chiseled me by an extra 2 cents. I think I came in at 85 cents. I don't remember what dollar amount, but I came in at 85 cents. All the robots instantly joined me at 85 cents, and then the robots chiseled the robots by coming in at 84 and then 83. And I was like, holy cow, like that's really wild. And I've seen that happen in thin equities too, but yeah, I don't know. It was a newer experience for me because I don't have as much options trading experience, obviously, as I do on the equity side. So appreciate the questions and comments there, Sky Shadex. Ken's got to get paid. Yep. All right, gang. Well, I'm gonna jump. Like I said, got to do a quick one today. So I hope everyone had a great day, and I will see you guys tomorrow. Adios.